Hello everyone, this is Evan here from the Trade Risk on Friday, January 20th with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then some sector analysis to finish off the video. We're going to skip those individual names, those popular high beta names that all have earnings coming up in the next couple of days and weeks. Maybe shorten up the video and focus on what's been going on here in the market and some of the other major averages. Let's get into it. S&P 500 finishing Friday up 37 basis points here on the day. You can see nice indecisive candle. We tried to push higher, tried to push lower, and closed ultimately exactly where we opened. Speaks very nicely and sums up nicely what happened this week and what's happened really over the past 5 or 6 weeks as we've kind of stuck sideways in this range. But let's look at the weekly chart because there is something important to take note of. If you look here, note we do have 6 weeks of basically going nowhere. But if you look closer, the past 2 weeks now, we've had inside weeks. So all that means is that this week we had all of the action traded was above last week's lows and below last week's highs. And then the same goes for last week. It actually stayed within the first trading week of the year inside of that range. So what it tells us is ranges are compressing, lots of overlap, indecisive price action, and this behavior leads to volatility expansion. We don't know in which way. I don't have a crystal ball to tell you if it's going to be higher or lower. I think there's too many mixed signals right now to have a very strong opinion or even have a good opinion on which way this ends up resolving. But we do know that we should expect some volatility to enter this market, and we want to be prepared for that. And if you have a strong opinion, if you have heavy exposure one way or the other, you want to be mindful that this could start to spill over in the opposite direction, and you want to be mindful of that risk. The good news, again, here is that levels are pretty clear. So 227.50, we've been talking about that area on the upside. We almost got there Friday, faded off of it. That's still the upside level to break out of. So if we can get a move above there, and not just an intraday move, you want to see a close above there, maybe 2 closes above there, depending on how you want to sort of determine when a true breakout sort of has happened. Use 2 days, use different ways to measure it, but 227.50 on the upside, 220, even 225.50. If you go to the cash market here, you can see this is a tight 2 weeks of trading price action here. If we start to really lose 22.60 here in the cash market S&P 500, then this could really start to roll over. So you want to be mindful of that. Very tight ranges, and trends remained higher, but as you can see, even by the MACD on the bottom here, momentum just continues to dry up, and there's just really no urgency in this market right now. So that's the read for this week. It was a very choppy week, and going into next week, the levels are still the same. We're still keeping an eye on those same points that we just discussed, and we want to be mindful of volatility sort of entering back into this market, and perhaps a little more directional certainty, whether it's up or down. We have to get a little more context and clues from the market before we can really make a firm judgment. IWM continues to slide lower, kind of hanging out near support. You could arguably say flagging. Again, larger picture context, nothing inherently, overly bearish about this price action. You would actually consider this pretty healthy, kind of bull flagging behavior after the move that we saw throughout November and December. We're working off those conditions coming into the 8 period now. Go to the Qs, and you can see we continue to kind of grind higher. We did have a little bit of a fade off of those highs. Could this be a double top? It could, but you really have the Qs that are kind of hovering higher. You have the IWM, the Russell 2000, which is hovering lower, and you got the S&P 500 just kind of stuck in the middle, getting smacked around both ways. So we don't know which way this is going to move, but you can see kind of the split market here. We're going through earnings season. Eventually, this could all tip its hand and be the catalyst as to what direction we really start to move from here. That's what I'll be paying attention to. We've been light this week. We've been selling out of most of our positions, locking those gains in, and still have a tiny, entered a new position on Friday, a small one, on the long side, but otherwise still a heavy cash position, and waiting to really see how the S&P 500 specifically resolves itself from this tight range. So getting into some of the other markets, TLT finding a little bit of a bid here on Friday off of these lows, still finished lower on Friday, but did manage to kind of rally back above Thursday's lows. If you look at the weekly chart, down 1.13%, looking like the past 4 weeks could have just been a bear flag, and we're starting to head lower. We've talked about also a range developing here in between, say, 123 and 117. That could be playing itself out, so keep that in mind. Not too interesting of a market for me right here. USO, this one continues to just hover in this range as well, not giving us much clues as to which way this all ultimately is going to resolve. It was very vulnerable back down here around this $11 level. We talked about 11.05 being support. We saw a strong bounce on Friday. Still though, just in the middle of this range, you can see hasn't gone really anywhere. And again, the levels are pretty clear. So 11.05 on the downside, 11.80 on the upside. That's what I'd be paying attention to. UNG also starting to roll over here towards the end of the week. So the bear sellers getting back in control. We got a rally all the way up to 850, potentially put in a lower high here, starting to roll back over, so it doesn't look too good for natural gas. If we go to gold, this level still kind of hanging in there, finished positive on Friday. Remember, this kind of back test, this retest of what was support throughout the beginning and second quarter, first and second quarter of January 2016. It's now coming back up there, retesting that area. So, short term, the bulls still do have the trend on their side. Weekly time frame, or that bigger trend, is still got some momentum to the downside ever since topping out back in the summer of 2016. And silver's pretty much in a similar situation, coming back into these prior highs here from December and November, above 1625, 1630. That starts to open the gates up on silver to the upside. In the short term, trend is higher, but if you zoom back out here, you can see it's been stair-stepping lower every 3 to 4 weeks. So just keep that in mind if you're looking at any of these metals. With that, let's get into some of the sector analysis, and we're going to end there this week. So XLP put out a post earlier this week, discuss some of the outperformance here, perhaps a little bit of a bottoming pattern you can see here after breaking through this trend line. Did finish, if you go to the weekly chart, you can see finished up 2% on the week. S&P 500 was down on the week, so definitely getting some action here into the staples. Want to pay attention to that. No position in here myself, but something I am paying attention to. XLI also, which is the industrials, trying to perk up here. If you zoom in, you can see it's been bumping up against this resistance here at around 63.25. It did rally above it on Thursday, held above it on Friday. So you can see this is trying to get back going to the upside. This is the industrial ETF, so you want to pay attention to some names in that sector. And also the materials kind of in that similar formation. It's been bumping up against $51. Did get a strong close here on Friday, so you could see some of these names just the same start to perk up and move again after they've been strong winners throughout the end of last year. On the downside, XLV, which started off so nice the year, is still continuing to look weak and roll over. Specifically, if you go to biotech, you can see coming back down below that 274 level, or at least challenging it right now. You don't want to see this slide too much lower, otherwise that damage is really going to sink in. Still up on the year, but gave back a lot of those gains. XLF, we saw this breakdown to kick off the week on Tuesday. We saw this breakdown here, but then we didn't get any follow through. But what we have to pay attention to is, is this just a short bear flag here for for 3 days, and then we're going to roll back over, or can the buyers really step up, show that they want these financials, get back into this range, take out 23.25 to the upside, and start to rally again? That's something we should be paying attention to. That might dictate even some of the future direction there in the S&P 500 as that sits in its tight range. And then energy just continues to be just very stagnant here, not really going anywhere. It's just kind of dripping lower, below the 8.20 right now. like to get some, like to get some movement out of these names to the upside once again to get some future catalysts there in the S&P 500 and broad market sort of participation. So that is the market recap for this week, January 20th. Hope you guys enjoyed. Hope you had a good week. Thanks for watching, and I will talk to you again soon.